Well, that certainly is the Federal Reserve's intention. If you look at Ben Bernanke's comments, his comments were that the intention was to complete the tapering of quantitative easing by the end of the year. And the logic, of course, is that there are 8 FOMC sort of meetings between now and the end of the year. We have got $75 billion per month now left on the QE program. If you cut $10 billion at each of the next 8 FOMCs, that will bring you to zero by the end of the year. But I think whether it's exactly completed by the end of the year really does not really matter. I mean, if the data is a little bit weaker, they might skip 1 or 2, which means that the completion of the tapering of QE might be completed by January or February of 2015. But look, essentially, it's either the end of the year or very early 2015. That's essentially the program. But I think based on the trajectory of the economic data, we should be pretty much done by December. Well, my concerns are that emerging market stocks, emerging market currencies, particularly those emerging market economies with shortfalls on their current account, which cannot meet their own funding requirements internally, domestically. My concern is that as tapering progresses and US dollar funding costs go up, there could be accelerated fund outflows again from these economies, which economies like Indonesia and India, Brazil, South Africa, Turkey. I think that's going to be a source of some volatility through the course of the year, which is why we are neutral weight on emerging market equities whilst we're overweight on developed markets for this year. Well, we continue our differentiation theme from the second half of last year. Our differentiation theme was that we would favor those emerging market economies with stronger economic fundamentals, those which run surpluses on the current account, not shortfalls on the current account. So by extension, the current account surplus economies should do better. Those are the economies and markets of North Asia, China, Taiwan, North Korea, Southeast Asia, likely to be Singapore, which runs a huge current account surplus, to some extent Malaysia, which also runs a current account surplus. So these are the economies and these are the markets that are likely to be more resilient.